Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the heat is going out of some of the global pressure points, and equity markets like that. But first, there was a dairy auction overnight, and not an especially good one. Overall prices were down 3.5% in US dollar terms, down 1.2% in New Zealand dollar terms. Leading the fall was the whole milk powder price, which was down 4%. We are lucky to have a depreciating currency because that has limited the retreat. Overall prices are back to where they were in August. American retail sales last week rose to be 12.3% higher than the same week a year ago. This data is on the same store basis and the strongest result since the end of August. Some of this increase will be inflation, of course, but not all of it. Meanwhile, pressure on the US job market seems to be easing. The number of job openings there dropped to 10.1 million in August, the lowest since June of 2021. That's down from a downward revised 11.2 million in July, and the all-time record was 11.9 million in March 2022. As expected, new orders for US manufactured goods were flat in August from the prior month, following a 1% fall in July on the same basis. Year on year, these overall orders are up 12.8%. In Europe, new September data out overnight shows that the pressure on producer prices there isn't letting up, rising an extreme 5% in the month to be 43% higher than a year ago. These are higher levels than they recorded in August. Late yesterday, the Aussie Central Bank turned dovish, raising their policy rate by only 25 basis points when the markets expected a full 50 basis point rise. Only 25 basis points is priced in at present for their November review. But markets now expect they will keep raising their rate well into 2023. Their new current policy rate is 2.6%. Markets now expect that to top out at 3.5% in the middle of next year. That is now a much longer hiking cycle than previously expected. Aussie building consents raced higher in August on the back of a strong recovery in consents for rental apartment buildings. It was a much more aggressive rise than anyone expected. Meanwhile, housing finance fell in August. Mortgage approvals are down almost 20% below their peak at the start of the year. This latest data on turnover and prices, available through to September, points to more weakening to come. And the US Treasury 10-year yield starts today at 3.63% and down 2 basis points from this time yesterday. And the price of gold will open today at $1,722 an ounce. This is up another $30 from this time yesterday to a 3-week high. And oil prices start today up $3 from yesterday at just under $86 a barrel in the US, while international Brent price has risen to be just under $91.50 a barrel. And the Kiwi dollar will open today at 57.5 US cents, nearly half a cent higher than this time yesterday. Against the Australian dollar, we're up 0.75 cents to 88.4 Australian cents. Against the euro, we're down 0.75 cents to 57.5 euro cents. That all means our trade weighted index starts today at 67.2, and little change since this time yesterday morning. We get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9.